And you guys can ask questions too, because I'm gonna ask him questions to kind of clarify. I mean, I know the answer, but I want to kind of let you guys be totally aware of how, I want to ask, how's the student loan affecting, there's a lot of people that are not paying their student loan today, right? So.
Yeah, but that's considered, it'll say on the credit report, student loan deferred,
Right.
because you might be still in school taking classes. But IDA and FHA lending requires you to take 0.5% of that outstanding loan balance and add that to your monthly debt.
So for example,
So for $10,000, that would be a $50 payment.
so 0.5% of that, $50, so that'd be,
So
and add that into your
Your
payment
yeah.
as one of your payments, right?
correct. So getting back to, I like using FHA lending because the government allows for less than perfect credit, lower credit scores, lower down payment, non-occupying co-borrowers to help with making the mortgage payment. So your brother, he could be a doctor and he'll co-sign for you for the house. And of course that would help us, get the loan to the table.
So what if your credit is not up to 640, and what do you?
580.
Five-
580 something.
No, it says 640 or
The
640.
640 credit score is required for
It's
IDA
required.
in order to get the grant money. FHA lending, if you had the 3.5% down and closing costs, we can go down to 580, okay, for lending. All right, but I wanted to bring up this IDA program because it's free money, $6,000 to help you with either the down payment or closing costs. I mean, unfortunately, houses today, $6,000 will go towards closing costs. If you bought a home in Chicago for $300,000, you'd spend about $6,500 in closing costs. And you could buy the property with as little as 3.5% down to $300,000. It's say $10,000. So $10,000 can come as a gift, right, to help for the down payment. The other $6,000 comes from IDA, helps it with your closing costs.
Okay, so you could
So
get
there's
them.
kind of a lot of different underwriting practices that I'm kind of throwing at you. But I'm just sharing with you, this FHA is the most liberal underwriting guidelines because they have a lower credit score requirement. They're more accepting of seasonal employment, which means, like landscapers might make $40,000 over the summer and then, maybe a little bit in the winter from snow plowing, be laid off, get unemployment compensation. I can add all of these factors into the deal, into the financing.
You were saying IDA is free money, so can we get IDA and FHA together?
Yes.
Okay.
Yes, I would normally do FHA, yes, because it's a lower down payment,
Okay.
3.5% down. I know you might have heard of 3% down conventional, but they have that certain credit score requirement. If that score's not there, it kind of kicks us out of the program. So.
I still have one question, like, what if your credit is like 600 or 620? Is that good to go?
For an FHA loan, it's acceptable for FHA, it just wouldn't be acceptable for IDA. That's why I said most people get pre-qualified, meaning they call their realtor and say, hey, I want to buy a house. And he says, hey, call Peter, let's get pre-qualified. So the biggest part of getting pre-qualified is having the ability to pull the credit and then see if there's any derogatory, anything isolated on there that we can correct.
But you
and
could
improve the
also,
score.
I've worked with folks who, when we first started, their credit wasn't up to par, right? Now, depends on where you are, we can kind of work with you to get that credit to where it should be. Now, I don't know if you, I have my own people that does, I think Peter has someone that does that too, right?
Yeah, we have, at my company, Guaranteed Rate, we have credit guys and girls that'll help us clean it up.
And
So it could take 2 months,
yeah.
or I've had deals where it's taken a whole year.
But at least if you're in the pipeline.
Yeah, but she wanted to buy a house, so she, a year is a year. I mean, if she had crappy credit, it took a year to clean it up, get all the derogatory off, and then she had acceptable credit.
My question is, how and when do you go for the down payment assistant grant?
The grant.
When and how?
Well,
Or do
you can apply with me for a loan, and then you take a class online with Ida. It's, might only take you a few hours to do that. You complete that, and then we start the process on the loan. It's a pre-qualification. I'd say, okay, you can afford to buy a $300,000 home. You're going to get $6,000 from Ida, and you got, if we do
So
FHA.
the lender has to let me know about the approval or
Yeah, I would work with you hand in hand with Ida to get you the grant money and then get you pre-approved for a loan through my company.
Just keep in mind though that you got to take the online class. Journey Forward offers it because that's one of the people that I work with personally, and you can go to them. I can refer you to them. And it's really a 1-hour class. And
But
you go-
I like it, it's good, it tells people budgeting and.
It talks about your credit, your budget, so this program tells you what you need to know in order to be successful. So we have an inspector on the line, sometimes I'm on the line teaching, sometimes there's an attorney, there's a realtor, and so we all come together just for you. And this is all volunteer that we do so that you can get that $10,000. It takes an hour out of our day, but we're all kind of focused on getting you a home. So we literally volunteer 1 hour of time just to talk to you to say, and when you're done with that, you get your certificate. You take that to Peter and tell Peter, hey, I got my certificate. That's why he can get, you get this $10,000.
My question is, if I have the class with you and you give me the certificate, can I go to him with the certificate to apply to still obtain the grant?
Absolutely, he'll obtain the grant.
Right.
You can take the class anywhere. I just use Journey Forward because I'm a part of that organization, and I could always say I could just call someone and says, okay, you'll be next. Sometimes we're on classes, and there's me, there's an attorney, an inspector, maybe 1 or 2 other people, and it's all about you. But it's educating you.
You have to get your evaluation after that. I don't think they give you if you just have a certificate.
They give you a certificate. Yeah,
The home buyer class.
The home buyer class.
Yes,
You
but
get
when
a
you
certificate.
take that, to get that money, somebody from the FHA or whoever they are, they give you an evaluation too. And if you're not, to see, you have to show them your income. They ask for some of the same things that the bank asks for.
Yeah, but we're talking about just getting the class.
Oh.
Just doing the class because
And
you got to
get
get.
a class
get-
online
You can do the class
Home
online, but you
buyer
got to get through the class.
Yeah, but
and get
I
a
think
certificate, and that certificate.
your certificate doesn't guarantee you the $10,000. That's all I'm saying. Because they are giving you that money, but they will evaluate you themselves.
Well, you just went through it.
Yeah.
Right.
He has experience.
Yeah, she just went through it. And you went through it Journey Forward, right?
I don't know. I went with some Latino.
Oh, you went Hispanic housing?
Yeah.
Okay, you went with Hispanic housing, okay.
So you get that certificate, but the same thing the bank is asking for, you have to give your W-2
Yeah.
of your income.
Yeah, it's
But that's-
required, yeah.
Just required, yeah.
They required 3 years tax
And
returns.
then you don't provide it.
You still got required to, yeah.
No, we need to know what,
No, I'm saying, we were talking about just.
You gave me
that
your
particular
email, I'll
class.
email you
Yeah,
All of
the
that's
course.
gonna be.
the course.
Okay. And if you want, you can take my card or give me your email and I can email you the course. And you can take it online at your leisure, and then you could still talk to me about financing. I would take an application over the phone. It would be a secure application. I can email you stuff that I need. Tax returns, W-2s, paycheck stubs, a bank statement, comes into my laptop, and I analyze it, and I can run it through to underwriting. And underwriting today is called desktop underwriting. It's called DU for the short acronym of it. And I just press a button, and it'll tell me yes or no. And if it says no, it'll tell me in what we call the findings, short money, derogatory credit, or it'll just tell me. But I'm not gonna press the button until I know I have a deal that I feel comfortable with, right? Some days it may not be that comfortable, then I can get a hand underwritten, reviewed by an underwriter. Maybe you don't have any credit, I don't know, but we use credit scoring systems, but guaranteed rate will do non-credit score borrowers. Okay, so,
Okay.
but as I said earlier to this young lady, I think one of the most important parts of any loan that I originate is the credit. I'm gonna be looking at that, that stands out. I know that if you make $50,000 a year in income, that's pretty consistent, $4,100 a month, 33% of that figure is what you can afford in a payment.
I just want to come, because Carol just came in.
Hi.
We were talking, she was just saying that, they do up to 580. So if you have a 580, it's a manual, right, manual credit score.
Correct.
Correct,
Right,
so,
yeah.
you can do, but that doesn't allow you to get the grant program. Because
Now, the grant program through the Illinois Housing Department Authority for that $10,000 or the $6,000 that I was talking about early does require a 640 credit score to get the money, the grant.
Okay,
Household
it's
income.
a must. The 640 is a must, right?
For the two loan.
For the
Two
grant.
Grant, right?
640 for the grant, yes,
Yes.
sir.
It's a
Yeah,
must.
yeah. In order for me to apply, you and I to apply through IDA, say, hey, I want $6,000 or $10,000, I gotta have that score, and I gotta have certain ratios that I talked about earlier, 33% and not exceed 43, and the household income cannot be over 113,985. So if you're making 75 grand and your wife's making 60, you make too much dough for IDA,
So like,
okay?
how much?
Not more than 113,
Not
100,
more
say
than
$114.
$113. Okay.
Right. Which would buy you a nice house though, okay? When rates were 3%, that was saying 4 times income, which is a $400,000 home. Now rates are 6.875, 6.75. It's gonna be a $300,000 loan, okay? And taxes in Cook County got whacked. So that unfortunately is hurting a lot of first-time home buyers too, because a house that used to be $5,500 is now $7,500. So I have to take into consideration taxes, insurance, and the payment back to the lender, what we call P&I, principal and interest payment.
So what's the difference between the class and this one we're having right now?
Well, see, I think this is just this is an informational session to get you to the class.
Yeah,
Really, that's what it is,
we're here
right?
to just-
We're trying to get you guys to understand that it is important to purchase, even though, and I was talking to someone yesterday, and I said, well, rates are too high. I'm like, my first home I bought at 11%. So to me, 6.5 is still pretty good, right? But it's important because there's a breakdown that I think maybe some people don't understand, in that when you buy a home, you're paying principal and interest. And some of that interest is tax deductible at the end of the year. So if your mortgage is, say, $500 a month, for example, by the time you get your, what's that? Once you get that interest back from your lender, and you deduct it from your taxes, your aggregate mortgage may be $450, right? I mean, your reduction, because remember, you're getting a reduction you're getting that money back from the IRS when you file your taxes. You're getting the deduction. So you're looking at your aggregate.
Yeah, it's called itemized deduction when you're
450.
deducting interest
Quick question.
and taxes.
It's, so when you do that and you write it off on your taxes, is it still 25% off, or you're writing off the whole thing? Because when you file taxes, like, okay, so when you work from home, right? Say you have a business and you use a part of your home. Everything in your home you do like 25% off. So would it be the same thing as the 25% off, or you're doing the whole thing?
When it comes to that, I think your accountant, based on your tax rate, I think that's how, based on your personal tax rate.
Okay.
Right? That's how that works.
Okay.
But you probably want to check in to see exactly what your tax rate is.
Mm-hmm.
But it's just a matter of.
Now, the whole reason we were here was just to have like a little symposium to kind of get you excited to maybe put your feet in the water to buy a house. Call Peter Streff, get pre-qualified, work with Leroy to maybe keep his eyes open for a home in the area. I'm not sure if you're looking at Rogers Park, Skokie, Niles, wherever. He has the ability, if I said, hey, Leroy, he qualifies for a $300,000 loan, we gotta find a house for 310, 320, he might say, we gotta go up in Gurnee. Can't buy anything in Rogers Park anymore. Maybe a townhouse.
Maybe a town, yeah.
You know, for under 300,000, because the city's gotten very expensive. Or maybe on the south side,
Oh.
you know, I don't know.
So I have a question.
The whole idea was to have kind of be an information,
Just information
talk
session,
about,
questions.
and then we
My,
can
my next
continue.
question is, if you go with a FHA loan, and I know that it comes with IMF, that's insurance money.
Well, and
it
then,
comes with
and
insurance.
all my loans, most of them will have what they call in my industry PMI,
Yeah, right,
private
okay.
mortgage insurance, because you're putting a low down payment.
Okay, so what I'm asking, what can you do, or how long will it be with you? Because I had someone say it has to stay throughout the lifespan of the loan.
For
And
an FHA loan.
someone say it can fall off after 12 years or 15 years if you refinance the house. So I need more clarification.
I think
If FHA stays for the life
by
of
the
the
life
loan.
loan, yeah, FHA states.
The conventional lenders, if you put 5% down on a home and we're approved and closed, the requirement is, hey, Streff, I'm gonna call you in 3 years to see if I can get rid of the PMI. It's up to the servicer of the loan. The servicers are Wells Fargo, Chase, Fifth Third Bank, all the big names, Bank of America. I originate loans, I fund them, and I sell them to these lenders. They buy them in bulk, $40, $50 million bulk packages, right? And then, let's just say Chase Bank is your servicer of the loan, you call them up 3 years from now, hey, Mr. Chase, Tony sold this house across the street for 400 grand, I only owe you 3, I'll pay for an appraisal. You know, will you allow me to remove the PMI? And under the RESPA's Real Estate Settlement Practice Act, it's required to say, okay, Mr. Customer, let's do it, let's see. You know, so usually it's three years minimum.
But I also think that for the conventional, if you don't do that,
Then it'll fall off at 7,
it fall out. Well, I think one of the things is
maybe 7.
maybe 7, but I think they must do that 78% loan to value. It's required for them to do that. If you decide you're not going to call them at all, right, and you just pay your loan, and even though your house is $400,000 and you only owe $200,000, if you don't take the initiative to call them, that falls off. It must fall off at about 78% loan to
I
value.
have a question, my question goes like.
But that's a good question, by the way.
Yeah, that's a great question. Yeah.
You've been checking around. so-
Yeah.
Yeah, because
Yeah, me too, because that's.
And just so you know, every scenario that we're talking about today is different underwriting. I'm just sharing with you earlier, FHA is the most liberal for us as a loan originator. They're more flexible on ratios, down payment, and credit scores, which are important, okay? In my world of lending, and I've been doing this for 30 plus years, ratios, remember I said to you 33% and 43%? Certain amount of income to pay that mortgage payment, certain amount of the combined debt and the mortgage payment to 43. I've gotten FHA loans approved as high as 50%. So.
No, is that compensating factors or?
Well, yeah, compensating
But-
factors.
but that's gonna say
money-
that-
Money in the bank
Yeah,
after
money in
you
the bank.
close, stable employment, been on the job for 10 years, that my laptop
So
pulls
those
in
are the
all that
compensating
information.
factors, right?
You know, the
Not
brain,
money.
the little computer pulls it all in and it's
And normally they don't
more
get
flexible.
approved at 50%. I
Well,
mean, is it
you know,
usually?
well, it depends on the deal.
That's what I'm
So
saying.
what is the benefit, we are talking about 2 grand here, 2 loan. So what is the benefit, someone putting down a down payment? Maybe have your own down payment, maybe let's say from 10,000? So what is the
You
benefit?
mean, what are the benefits of putting down a down
You
payment?
get $10,000.
Well, that again, that goes back to the 3.5% down on 300 grand is 10 grand. That's the down payment requirement. You also have closing costs when you buy a home in Chicago area that I said were about $6,500. And that's why I said we would go to IDA to help that out too.
To get that actual $6,000.
Okay.
But
You follow me on
you
that?
follow, yeah.
So I always have to have a minimum investment into the deal. FHA requires 3.5% into the deal. So when I just rounded up, I just said for 300 grand, 3.5% down is $10,000 of your own money in the deal. It could be a gift. You know, your father could give you the 10 grand down payment. And then IDA, I'll go over to IDA and say, hey, I need $6,000 to help this young lady buy her house. Her credit score is 640, the ratios are fine, and she took the class. IDA would approve that. Okay, but I have to have a complete package. So as an originator, I originate loans, I get, well, now they say 2 years tax returns. It used to be 3 years. So 2 years complete tax returns on the household, so that's you and your husband, W-2s, paycheck stubs, 2 months bank statements, and the credit report. If all of that fits in, I'll just say the box, then
3 years
you're
tax
approved.
return, right?
Pardon?
It's a 3 years tax return.
Two
Two
now.
years, okay, okay.
Two now.
Yeah, 2 now.
As of
Okay.
last
Oh,
week, it's 2 years.
Okay, that's fine.
Okay? So, you know, it can be very confusing buying a house because there's so many loan programs out there, and I get lost in them all too, and I'm not gonna sugarcoat that. I'm just saying from my own experience, FHA is the most liberal underwriting guidelines. It's most flexible. But I try to do that in conjunction with IDA because that helps you out. They can give you 6 grand, they can give you 10 grand, they can give you 4 grand. It all depends on which program we apply for. Okay? And that changes, IDA changes their rules, you know, every year too. So keep that in mind.
Okay, so I got that. Then my second question is this. Let's say if I buy a home and my home worth like let's say $450,000 and my monthly payments maybe let's say $2,000 a month. Like you mentioned something about principal, something like
Principal interest.
yeah.
Right.
Let's say if you put $5,000 every year, you know it's gonna be 30 years program, right? You put 5,000.
Yeah, if you put additional monies that go directly to the principal
Principal.
reduction of the outstanding loan balance.
Mhm.
So if you borrowed 300 grand and say, hey, Pete, I got another 10 grand, I won the lottery. So you apply that and now you owe 290 instead of 300 grand. Your mortgage payment don't change because you're always paying the same mortgage payment because you signed a promissory note at the closing table that says, hey, Struff, I'm going to pay you $1,245 for the next 30 years.
So whatever thing you pay on the way doesn't change.
It doesn't change anything.
Yeah,
It
but
doesn't change, but it
But-
shortens the time frame.
Let me address that a little bit more discipline.
Discipline, another big word. You guys got all the big words today.
So let me explain that. Your mortgage is $1,200 a month, right? That's what you're paying, and you take that $1,200 and you divide it by 12, and so you pay an extra $100 every month. It has to be $10,000. But if you stay with that over the life of the loan, I believe you've cut your mortgage 7 years by paying that $100 every month towards principal. Now that can cut even more. That's sometimes some people say, hey, I'm gonna get a 30-year mortgage, but I can spend $1,500 a month, right? But if you consistently do that, then you're basically cutting your mortgage in half by just paying an extra $300 a month towards principal. So
Time frame, mortgage time frame.
Yeah, mortgage time frame, not the payment. So you pay less principal over the life of the loan.
Less interest.
Less
Less
interest
Interest.
over the life of the loan, and you pay off your home a lot faster. So instead of saying, okay, I got $5,000 this year, I mean, you probably want to be consistent. It's better that way. Imagine If you put 5,000 today and wait 2-3 years later,
Okay, what
another
if you
5,000.
win lottery and you wanna pay it?
Well, then that's okay too.
You wanna pay it off, like pay everything off at the same time, so what's gonna happen?
That's fine.
It's fine, no?
That's fine.
Yeah, but they're gonna give you their price as of that time.
Oh, shit.
They'll go. You'll get your pay off your principal fine, and that's okay. If you won the lottery, hallelujah, pay it off, right?
Yeah.
I mean, so that's fine. That's fine. There's no prepayment
And
penalty
this is
in
my
Illinois.
fear, this has been my fear for years of buying home, because people just buy home, but they don't know exactly what, the
Process.
Yeah.
Well, let me say something. People are scared because people say, "Hey, well, I can't buy a home." But when you, all right, someone gave you a quick story, right?
Uh-oh.
Quick story. I started the business many years ago, and I was selling real estate for 4 years before I bought. And what I'm doing, I'm acknowledging your fear, because I had money in the bank, and I was buying my home, and I was like, "Oh my gosh, I gotta buy a home now." I've been selling home, but now I gotta buy one now, so I gotta come up with this money, and me and my wife went to the bank and like, I gotta take all this money out, right? But I'm just acknowledging your fear that yes, people do get afraid. And my early years, I got afraid of my first home. But you realize that you gotta live somewhere. And it makes sense to buy a home and pay a
makes sense.
mortgage.
Like right now for me, or like I'm living in the back of this Demon, right? Yeah, like I'm paying almost $2,000
A month?
a month. Everything I pay parking lot. So if you add it up, it's almost
A month?
That's a good money for a dog.
That's
for
a-
a
Yeah,
monthly
so
That's
payment.
that's why we
man,
are
about $300,000.
get our own.
You are more than old enough to move.
It's right around there.
Right around $300,000 home you can buy.
Can I ask a question, please?
Yeah.
If you go with FHA loan and after a year you want to take equity out from the house, how do you go about it?
You want to take money, what we call equity,
Equity,
that's in the
yeah.
house.
From the house.
It's possible if there's that much appreciation, then you could get what's called a home equity line of credit from the bank. But, in a year, that's a short period
Not
of
from the
time.
lender now, from the bank.
From the bank.
Yeah, because
Wherever.
I mean, I can do home equity loans, but sometimes it's easier. If I sell your loan to Chase Bank or Wells Fargo, it's just kind of easier sometimes, I'll tell you.
But I want to address that because
Okay, please, before you
Go
address,
ahead.
let me add something. What if you move into this place and decide to change the lights, the floor, and the house become more
Value.
modern or more valuable?
Sure.
Now, that means you added equity
Yeah, we added
directly to
equity.
the house,
That's called
right?
sweat
Not,
equity, yeah.
not on the principal you are paying, but direct to the house.
Yes, sir.
So, based on that, you can take out more. That means the house must have appreciated. So, you can take more money out from what you initially paid in the principal.
Well, no, you wouldn't take money out to pay down the principal, because if you're taking money out.
No, I'm saying if you pay the principal, for example, my monthly payment is $2,000 plus tax, plus interest rate. Now, 2,000 times 12 should be $24,000. But I did some work in the house that must have gotten to maybe $100,000. Now, I'm saying if I want to take equity from the house, because the only equity that I have there is $20,000, the monthly payment I've been making.
Right.
So if the house if they check the house and the value goes up, that means I can take more than the $20,000 I put in the house, right?
That would be the plan, the perfect
That's
plan.
the plan.
Okay.
But
I like that. That's a
promise
plan. But that
anything
doesn't
like
mean
that.
The
that it
bank
happens.
The bank is to make money.
You got to keep in
And
mind.
sometimes they don't count the floor or the kitchen you put in. Sometimes
Inside.
Yeah.
they have rules where it's nice for a buyer to see, but they don't put that as, that you can get money for that.
But,
Because
go ahead.
Yeah, go ahead.
Go finish it.
actually the way they see it, it's your home. And whatever you're doing,
Is you're doing it for
it's
yourself.
you're doing for
For
you.
yourself.
Okay? So they have these rules where, and people will tell you that don't invest in like the floor, the lights, and you have spotlights, you have all this stuff. That doesn't mean that the bank is gonna see that and say, well, you have to go. The bank goes about mostly, because that's why sometimes even if your house is not fixed up, you could get a lot of money for it, because the bank goes about what are the houses selling for in your neighborhood. That's what the bank is based on, okay? So if all the houses in your neighborhood is $300,000, that's what they're gonna say how you get money out of your house, but not really. Some things that you fix up, they don't count it as anything. It's something that will make you sell your house quicker.
Quickly.
If I come in and see you have all these nice things. I
Like
will
putting
say,
tiles in front of the house,
Makes
Yeah.
you-
putting a swimming pool by the
It's
side.
all based on the appraisal value,
Yeah,
Okay.
right? And so, as she was saying, it really depends. So and most of the time, if you buy a house for $100,000 today, next year, the bank's not gonna raise that, to $140,000, $50,000. The value is just not gonna go, unless you really bought that property cheap and put in like way under value, and you've put that money, and the bank can show that, yes, I have put, you go from this and this and that, all that into the house. But you have to buy that property much cheaper than the property in the neighborhood, like what investors do. Investor would buy a property for $60,000, and if they can show the bank that they've put in $40,000, yes, they can get that appraised value. Because sometimes I've been in a situation where the bank asks for the contractor and their license and their receipts and all that kind of stuff. And with those normally, because that's sort of a flip, right? That's sort of a flip that happens. So that can happen, yes, it can happen. If you're an investor, you buy it cheap, you put the money, you show the receipts, yes, the bank will give you the value. But for your personal home, if you just kind of make it nice, you just made it nice.
Yeah.
It's just based on the appraised value in that neighborhood. All right, so don't go in and put $100,000 and say, I want my $100,000 back, right? That may not happen.
Practical example. Well, if you have a house that doesn't have the basement is empty, or the basement is like a storage, now you turn it to be like
Finished basement.
Basement, yeah.
Yeah.
So
Sometimes
does
they
that-
give you
does that
value.
help
You'll
the
get
house?
value.
Yeah,
You'll get value, but I'm just saying you're not gonna,
It's not always dollar for
not dollar for dollar, right? Not
Okay.
always dollar.
And again, it's like underwriting. Everybody in this room is different.
Yeah.
And you got a different story, different income, different credit. But it is possible.
Yeah.
I've seen it. People buy a house right now. I just closed on a house in Portage Park, Irving Park, on the, it was like 4,800 West. And it was an estate sale. We bought a brick bungalow in that neighborhood for $240,000, which is a deal today.
It's a deal.
But because of the industry, I have to wait a while to refinance. I gotta wait a year so we can get cash out, because I know the property appraised for $300,000, but I know it's worth probably $350,000 once he finishes the kitchen and baths and blah, blah, blah. Now, those are very rare to get
Yeah.
a deal like that in the north side of Chicago, because there's 10 people here in this room right now, and all 10 of you would probably run over to try to buy
It's
that
about
house.
a house, yeah.
And that's what's bidding up these prices right now. There's 10 people for every house. In Rogers Park, there's probably only 30 homes for sale, we'll say, and there's 50 people looking. So when you're selling a house for $400,000, Tony will pay $410, Sally will pay $420, and before you know it, it's higher. Okay, that's what's happening with the market
In the
now,
market today.
unfortunately. Limited supply, high demand. Even though rates are still hovering in the sixes, that's not impacting the buyers they want to buy.
The qualified buyers.
They want to buy. They got
Qualified buyers are still buying. So people, and I talked about this on my last podcast, and people think that property prices are falling down. I mean, you hear it, but we, at least me and the
I
ground
don't see it.
realtor, we don't see it.
You know,
And they're like, oh, rates are going up, property prices are falling, but we don't see it because the fact is, we still have, you know, you have an offer, it's like, you have a home with like 5 offers, right? That's still there. There are some property that are still, that are on the market a little bit longer. Yes, there is. But if you price your property right, it goes, just like that. All right, so, as we say, well, so right now, I think we're 3 months behind in inventory. Means that really all that's saying that there's not enough inventory, right? To say, well, hey, you know, I'm going to wait till next year to buy because it may fall down to 20 or 30%. That we have not seen that as yet. At least we don't see that coming down the road this year because of the fact that we don't have the inventory. So the value of homes are still pretty much hovering. I would say they dropped maybe 5% based on my calculation, but it's not falling down. And the sky's not falling down. There's still a lot of money out there. There's still a lot of liquid cash. And you know, I like to take the 2008 recession and the 2000 and what's happening now. In that, as you know, we were in the industry at that time of 2008, and mortgages were, you could be in your sleep and get a mortgage. It was that easy. So of course there was a crash, right? Because people were doing 110% financing, 125. I mean, no money down. I mean, it was nothing. I mean, it was just crazy financing. Yeah, the bankers were making money, the realtors were making money, but it was bad for the economy. So since that has changed now over the past, since 2000, I mean, the market started coming back in 2010, 11, 12. And so that changes. And so now you have to be literally qualified to get a mortgage now, right? And so we don't see that anymore. So the value of property is still pretty much at
holding steady.
Holding steady.
And that's all over
I
Chicago.
have a question for you.
Yeah.
You have been on this game for a long time. Now my question is this: minus our personal interest of a particular house or desire to buy a particular house. As someone that has been on this game for a long time, what do you advise a first-time home buyer to look out for? A old house, a house to like use your hand to fix it, or the one already fixed, or a brand new one, or a land to buy and build?
There's a whole lot of questions in there. That's a lot right there, man. First of all, if you're qualified, if you're going to be in this area where we at, land, how much for a land? About $100,000?
Where? Chicago?
Up north?
South side?
Up north.
Sorry, I apologize, but there's nothing on the north side of Chicago.
Yeah, you can't
It's
find
affordable.
for just land. I mean,
Land.
at a first time buy, I wouldn't
And then
advise
you
to
have
go
to
buy.
get a different loan. That's a
So
construction
you're better off
loan.
just trying to find a house that might need some light cosmetic
Like,
work,
yeah.
okay? All right.
And
There are
depends on
loan
your income.
programs that will allow me to do renovation.
Yeah.
It's called the 203K loan, but that, we can talk about that too, but the best thing to do is to try to find a house that needs, hey, I don't like the carpeting. Tear up the carpeting, sand the floors, coat of paint, and sooner or later I'm gonna redo the kitchen. That's kind of like I call it just a beginner house. That would be the nice thing. When I bought my first home at 1818 Morris here in Rogers Park for $100,000, it needed, this guy he collected shit from all, I don't know where. He was just what do you call those people? Hoarder, thank you, you win. I mean, it took 5 dumpsters to get all the crap out of the house. And then I could see the home. And then we just painted it, my wife, we sanded the floors. And then over the course of time, we did the kitchen, and then we did the bath, and, just.
Well, again,
we were there.
location. It all depends on what you can afford.
And that house I bought for $100, I sold 3 years later for $175.
Right.
So I made money because I put my own sweat in there. I was there till midnight cleaning and painting and doing everything. So I made enough money to buy the next house with a bigger down payment.
Now you guys, we're north, of course, and so
I don't know what the average house sells for here now.
over 300,000. And there's not much home in Rogers Park. I mean, this is where we are. But later, I think there was a couple of homes, right? So, did you ever look?
Yeah.
Like a couple, 4 or 5, 6.
more condos than.
Yeah, there's a couple of homes in Rogers
You know,
Park.
it used to be affordable to buy a home.
It's not-
Even
it's not
townhouses
affordable, yeah.
over there by Howard and
How
Western
many
were
bath-
low.
How many bedrooms for the condos, like 3 or 4 bedrooms?
All right, so I sold my last condo, right?
It comes mainly to.
Well, it all depends on what, I mean, we just missed a 1-bedroom condo for $100,000 over in Estes. I made an offer on it without even seeing it, and it was gone. Right? That was $100,000. Right? So it depends on where you are and you know what you can afford. Because if you're making $30,000, $40,000, that's a year, that's not gonna get you something in Rogers Park. No home.
I'm planning to move like.
You gotta
not
go
to 4 months.
way north suburbs or south sub. If you're making 40, 50,000, that's about 200,000. You're not gonna get $50,000. Is not gonna get you something in Rogers Park unless you get a condo at about 180, right? Because you have assessment that's gonna add it to that. I say,
Yeah, that's where they come up with affordable housing. It's just hard. Like, you know, it's just hard right now.
So apart from
unfortunately.
Rogers Park, what of?
But I want you to get in the game
yeah,
so that at least you're building up some equity.
Be prepared.
be prepared, correct.
You know, the.
Right now, the
what-
best-
everybody,
The
be
best place
prepared.
right now to buy, and it's not a great neighborhood, the government, the city just allotted on the south side $1.5 billion to invest. But right now, that's the best place to buy. That's where the funds are coming. I was in a meeting yesterday with she heads the L. She's the person that, city planner, the girl that heads the L from 95th to all the way south. The folks down there, that's where the money is coming. The Biden administration just allotted $300 million to go from 95th to 130th. I know we're not in that area, but you was asking, you know, just an idea. And just the fact that I was in that meeting with the city of Chicago yesterday, you realize that for the investors out there, they'll be making a killing if they start buying now. We're in a different neighborhood, right? And on the west side, we have allotted, you have you have Bickerdike, and Bickerdike is a nonprofit organization that's putting tons of money on the northwest side, West Town, Humboldt Park, Logan Square, right? So I'm just telling you that in that area, that Bickerdike is putting a lot of money in that area. So if you're looking for sort of north, then Humboldt Park, Logan Square is where they're putting money into.
And it might be more affordable on West
Yeah.
Humboldt Park,
A
yeah.
bit more affordable. But it's still kind of coming together. There's the city of Chicago, and this is just information that you guys probably would know. So I'm just kind of giving you that because of the organization I'm a part of. The Land Bank of Chicago is giving away land to certain investors on the northwest side that the city actually owns. And the land bank is giving those investors to put brand new homes. And it's really affordable housing. Like if you go down Chicago Avenue, you see the acres that they put in the new police station, all that bunch of stuff on Chicago. If you ever go on the northwest side, and all the city-owned land that's within the northwest side of Chicago has been given to, most of them given to home developers. Affordable housing. So build new and sell at affordable prices. I saw a 2-flat brand new sold at $375 on Homeland, but that's affordable for that area. At $375 brand new 2-flat with a basement. So there's lots of money coming, but in our area it's kind of a little challenging. So you have to think, do I want to stay here in Rogers Park? Do I want to go to the northwest suburbs? Or, depends on your income.
What of Norwood Park?
Yeah, Norwood Park's there, but yeah. Norwood Park is right out here. out west.
Expensive.
It's expensive,
Wow.
you know.
Chicken out.
I want to ask more question. Sir, you said one can take money, that you took money to fix your house, right? That very money, is it going to be a different loan, or they're going to add it to the house, the entire house loan?
That's, there's two types of ways to skin the cat. There's a home equity line, so that's called a second mortgage, because you don't want to maybe touch the first mortgage, or you do a complete refinance and get a whole new mortgage with some cash out. So it all depends on the timing. Right now, rates are, like I said, 6.5% to 7%. Maybe in a year, they're at 5.5%. Maybe. And your property is worth more money, then I would recommend at that time, a year and a half down the road. When's the election? 24?
24.
All right, so something's gonna happen in 24
Oh,
because it's
it's-
an election year. But
Always.
let's just assume rates are a little bit more favorable from where they are today. You might, and you did all this work, we do a whole new loan. So if I closed you today in April of 2023 at 6.75, and in April of 2024, rates are 5 3/4, that whole percentage point, get the cash out, get rid of PMI. I mean, that would be a great game plan, but again, I wouldn't know until we kind of got dove in, right? Like, that's why you're here today, to dip in the water, to maybe ask questions about financing, or how to get a home
How do you know when the rates are changing? How do you get information?
for.
The rates.
When the rate is up.
How do you
Oh,
get
the rates?
Yes.
Well,
Can you
rates,
just go online
rates
and
change
check?
every day.
I know, but how do you get the
How do
information?
you get to know when?
Well, IDA emails my company the current rate that they're providing for first-time home buyers.
We always
For-
call him to
For
find
the
out.
grant, for these grant programs, and those change. With IDA, they're usually good for about 30 days.
So it's not
They
something
change.
I can pull up on the internet, no.
But you could probably type on the internet, you could say IDA rates today, you probably get something. There's so much information on these things today. You know, I just hope it doesn't talk about my waistline.
But at the
I
same
ate so
time,
much pizza the other day, I still feel fat from it all.
at the same time, don't think the rate that you see today
Right.
is going to be tomorrow's rate,
Right.
right? Because people say, "Oh, well, it's 6.3," and then when you lock it 6 point, you can grab a seat anywhere.
6 point, yeah, they change, for my world, they change every day and sometimes twice a day.
Twice, yeah.
More, depending on how the market's moving and whatever this guy Fed Chairman Powell says. The wind blows, it's scary, you know, that guy speaks and the
Yeah.
market goes
The
crazy.
market goes crazy.
Leroy,
But the only know you when your rate is confirmed if you lock your rates. If when you start and tell Peter, listen, what is it today? Lock it. Then you know that's your rate. But if you what's called float your rate, it could be up, it could be down. You can get an
How
advantage.
do you look?
How do you look?
Peter locks.
Well, I would lock your loan once we have a fully executed contract that we've done all our due diligence. We've done a home inspection. We had the attorney review the contract, or he and she say, okay, it looks good. Leroy, it looks good. All right, let's go.
Then we lock. And
Then we lock it, and then usually a loan can be approved within 30 days. The typical turn time. If I have everything up front, right, your tax returns, W-2s, paycheck stubs, bank statements, it could be faster. We've already dealt with maybe potential blemish on the credit. I don't know. Everybody in this room's got a different credit history, just like they have different incomes. So each individual, I mean, I've been doing loans 30 years. I've never had anybody the same. Where she'd walk in and she makes $80,000 a year, has 80 grand in the bank and 800 scores. I've seen one person in 30 years like that. Okay? 90% of my business is an FHA loan, 620 credit score, borrowing from Leroy for the down payment, or getting a gift from Leroy for the down payment, or Peter, or Paul, or somebody under the table, whatever. We're finding a way to get the down payment, get some money from IDA, whatever. But I want to get you into the house. That's the number one goal. And sometimes some deals go smooth and some are rocky. We just got to be, and stressful. I'm not going to sugarcoat it. Some deals are very
So can you give
stressful.
example one or two things that make it look rocky?
What's that?
I
What
mean,
makes it rocky?
yeah, one or two examples.
Well, there's, we got so much
Rocky could be-
You gotta
examples.
get all the paperwork, you gotta
You know,
get your W-2.
inconsistent
And they can ask
employment.
you, they can ask you to do things to, if,
To boost your credit up.
that, like they'll say,
You know,
you gotta
maybe
pay
not the
your,
best
your
credit.
car loan off. Okay, maybe you think, I got everything, and then they'll come back to you and say, well, we looked at this, you gotta do this, or you gotta do that. So it's not, if you go there and you have, well, you can think you have everything, but then the bank can ask you for something else.
Let me give you a good example of being rocky. So I have a closing, I don't have it anymore. I suppose I have a closing Tuesday, right, for a home, a 2-flat. Yesterday, I got a call from the attorney. Bad news, we can't close. Why? Because the seller, there's a new lien that just came up on the seller. A new, from the state of
On
Illinois,
the house,
on the house. And we are already scheduled to close. Money's already wired in. The buyer's ready to go.
an inspection done.
Everything is done. We're just waiting for the day to come and close on Tuesday. We already scheduled it. We already have preliminary arrests by everything. Yesterday I got a call because when you buy a house, you have to get what's called an updated title a day or two before closing, just to make sure there's no lien. So, seller had a lien. What
So
can I say?
can the money be deducted from the,
Well, see, the thing is, you got a lien, but then you gotta try to get a release of lien.
okay.
I mean, it'll
Let me
close.
tell you a true story,
It'll
right
close.
now, right now, I'm the banker, she quit her job the day before
The day
closing.
before closing, yeah.
That throw a major wrench in my thing because I'm required to call the day before closing. And unbeknownst to me, she said, I quit, Struff. And I'm like, wow, that's not good. Rockiness, she's got another job, but she's not starting for 2 weeks. So I gotta wait.
You gotta wait till you get a
I gotta
paycheck.
I gotta wait till she gets a paycheck. So that does happen. People just, or they go out and buy a car and we re-pull the credit. It's called the soft pull, just a couple of days before closing, and people have bought cars, furniture, boats, and then, you know, that kills my ratios. And that's how I become rocky. I gotta dye my hair from the gray. But all sorts of stuff. A complicated loan for me is, let's say a landscaper works for 5 landscaping companies. I have to get 5 verifications of employment, right? We gotta either email them or send them out. We gotta add up all that income and make sure that it's consistent, matches with his tax return. Okay? He also gets unemployment compensation, so I have to average that into the deal. He's getting a gift from Sally and maybe from Paul, and I'm like, you know, I gotta dot all my I's and cross all my T's. It's a lot of information, and an underwriter's gotta review all that stuff to make sure that I put it in order. But if I like the deal from the get-go, I see light at the end of the tunnel, well, I'll take the deal. And I'll say, hey man, this is gonna be a rocky road. There's gonna be a lot of, you know, I'm gonna drag you through the ringer, but at the end of the day, you're gonna have a home. I had a girl that made 80 grand a year, had 80,000 in the bank, 800 scores. I mean, I was like, there's gotta be something wrong here, but nothing. It was perfect. And I'm like, wow.
You don't see
I'm
the-
being straight. 30 years of loans, that's the first time I saw something that perfect. I wanted to hug her. But, you know, like, sexual harassment today, I get in trouble. You know, that Me Too, whatever that's called out there. So I got to be cool. Anyhow, I don't see that very often. I work pretty hard, big these deals to the table. Nobody in this room has got the same footprint.
I want to say the reason why I work with Peter, because Peter will drive down to your house and Timbuktu to get what he needs.
Right, I do
Right?
that a lot.
And so even though
we
it's been a long
close
time, he will
deals.
go pick it up and grab it, and so when he got it, it's
You
like,
can
okay.
hug me, Peter.
You know, all right. And let me tell you, you know, I do a lot of different cultures, Indian community, right? I had an Indian guy come to me for the loan. This was during the downfall in 2008. He bought a house in Skokie, and there was mold in the frickin' basement all the way around from the water, black mold, and I'm like, shit. You okay if I wash all this down with bleach? He goes, Struff, let's wash it with bleach, we'll clean the basin, and we'll get it all pretty for the appraiser. And then when we close, he goes, you know, Struff, I come from a town in India we kind of slept in mold. It was your little bit of mold over there was nothing. So he's got a beautiful home in Skokie that he only paid $220. It's probably worth $450 today. I'll never forget that. He was so kind. He was like, Streff, let's go get the bleach, come back, clean it all off, all the
Did we
walls.
do that?
I did that with another realtor, Jesse. He's an Indian guy over there on Devon in Fairfield. But I've done that
No,
many
I
times.
know we've done that because I did
Many
that.
times. And it's just,
Yeah.
I want to get it. If I take a deal, I want to close it. I don't get
Exactly,
paid.
exactly.
Okay, I don't get paid.
More questions. What if you, after closing, now you move into their new house and realize that there are hidden cracks on the wall. Maybe the time you bought the house was during summer. Now spring is here and you see water coming from the floor of the basement. Now, this is gonna be a huge, big expenses.
But
Who gonna
let me address that, just kind of go a little bit further. To sue someone for that, you have to probably see his neighbor or someone across the street that says, yes, I know that he knows that water was in the basement because I helped him. Right? That's how that works. You have to really, and someone's willing to go to court with you and says, Judge, he lied. I was in there when water was in there. So it's not an easy case to prove, because if the neighbors know each other, they don't want to go, they can tell you that, but if they don't want to acknowledge that legally, that's it. You can't do anything about
But
it.
you're gonna have a home inspector.
You have a, but there's
Yeah,
They're
times,
gonna
you know,
inspect
that-
all that stuff, they're gonna dive
yeah,
into
but
those
there's
type of
time when
stuff.
they missed it.
But don't you,
They
when
miss
you close, you have an insurance for stuff like that?
Oh yeah, you have insurance, your insurance
For
cover your water,
homeowners
yeah.
You
insurance
have
would
your
cover that.
homeowner's insurance, that if something happens in your home after you buy it, they will cover that. And that's in your mortgage.
Yeah, the insurance will cover it, but I'm answering your question like if the seller would lie.
For example, she say insurance will cover. For example, if you buy a house and insurance realize that entire roof need to be changed, entire floor, sometimes I heard that they normally chicken out from that kind of investment.
All right, so I don't want to kind of lost you guys, but that can happen. But when you first buy a home, the insurance is responsible to cover it. Now, to get an insurance to cover your roof, yeah, they'll come and inspect and to make sure that roof is not damaged by, and normally it's by weather or wind or something like that. It's not just like, oh, the roof is old, cover it. Right? I just had a situation right here in Fargo that I tried to get the insurance to cover this, and for one of my clients, they say it's too old. Right?
When we had that house.
That's what I'm saying.
They
They always
cover.
say it's too old or look for an
It
excuse.
could, so that's an insurance thing that I don't want to say it's
It
a.
depends on your
It depends, because,
Because we have had insurance cover the roof for hail.
oh yeah, for hail, no. For hail is fine, for wind, for rain, for, if natural disaster, they'll cover it. But just FYI, if it's just old, like I just got a call last week, it's just old, and I was just kind of throwing caution to the wind and have them and file a claim, right? I'm like, if the insurance can cover it, why not do that? But they said no. But if you got hail, I said, yeah, they'll cover it. But I just want to say old roof, they're not going to cover it.
Yeah, you're right. You're a professional, you're right.
Old roof, they're not
I'm
gonna
just trying to help you.
But that's some of the things that insurance, but insurance will cover. You have insurance for hazard insurance. Where the water comes, like you get up, there's water in my basement, yeah, call the insurance. They should cover it. There's normally riders on it for water and all that good stuff. For your home. Well, in the wind down, yeah. Tree fall down.
Technical question. I learned that he and you are making money from us, the first home buyers. So I'm just coming tricky.
Oh, you could
Now,
be tricky.
yeah. Now, you looking for the house, and you claim that you helping me. actually
No,
you are
not
helping.
claim.
No, I'm coming.
I'm responsible for you.
Okay, now,
Not claim.
now you
You're my
have,
fiduciary.
you have a third deal or a third party to the seller.
No,
No.
I don't.
No, as a
That-
buyer's
that's
broker,
a
his
buyer's broker.
relationship is.
So with me and you,
with
my total responsibility is you. I don't care what the buyer, if I can get you the house for $1, that's our job.
Okay.
The seller is responsible, the seller has his or her own broker. And me and them gotta negotiate. So I represent you and you alone.
He gets paid by the seller.
And I'm paid by the seller, I can be paid by you also. But
That's,
normally,
that's where I'm coming. If he pays you, that means he can dance to his tune.
no, I have no responsibility to them, they only pay me. But my responsibility is to you, not to them. Now,
And you don't pay me, I get paid by the bank.
1994, I think,
Yeah, no, you are different in this one.
You know, I'm out of it, his job is, he has a fiduciary relationship, he's licensed, and in order to keep his license active, he has a fiduciary relationship with you to act in an honorable way, make all presentations to the seller, and do his proper, help you with due diligence. Due diligence, hey, I want you to go to Peter Streff, get a loan, work with him, he's an okay guy, I've known him for 30 years. I want you to use Sal over here as home inspection, because he's licensed, bonded, and insured, he's somebody I've worked with for 30 years. He's, you know, he's good at what he does, and he might recommend an attorney, right? I mean, and I like this attorney because he answers the phone, he's prompt, he does good due diligence. So that's kind of what he does. I get
And now
involved.
the wife is the seller of the house.
Who?
And now
His
the
wife?
wife is the seller of the
I
house.
said, so.
Oh, no, that won't work because
It won't, yeah.
he can't
It
do
won't
that.
work.
He can't do that, no.
Okay.
He can't represent buyer and seller, you know.
Okay,
It's
So
not a
he's
good-
representing me, but the wife owns the house for sale.
Okay, for me,
Well, you're really, he's going, what did you do, go stay up last night? Huh? What's going on?
Too many people in his ear.
yeah, you're right, you got two people
You're
here.
thinking
but-
the worst, you're thinking the worst stuff for a home buyer, stop it.
But
90% of the deals are nice, right?
I still wanna answer your
Small
question, though.
percentage are not, very small.
I as a broker, if I have an interest in that deal, I have to tell you. I can't hide that from you. That's disclosure, because if you find out, you can report me. So even if I'm selling my own house, I gotta say I have an interest in this property, or I am the broker, I'm the seller. You have to know because I'm the professional. If you want to work with me directly, fine. You can go out and get your own broker, but I gotta tell you that. Alright, so I want to make sure that I answer your question.
Yeah, that sounds better.
I didn't have, you know,
You can work with me.
Yeah.
But I'm licensed, we'll find somebody.
We'll find something. But I mean, I do want you to ask the question so you're totally aware of how the industry works, right? So no question is kind of crazy because people have stuff in their head, right? And they're thinking. So bring it out and we'll answer. It's not a problem.
Yeah, for the late people that got in here, we were talking earlier about programs and we were discussing FHA and all of the things that can come up. So, and the financing options that are allowed with FHA. I just want to reiterate, as a lender, 30 years experience or better, I forget how old I am. Anyhow, FHA guidelines, I like the fact that they'll go down to a 580 credit score, which is nice. They'll allow 3.5% down on a purchase money mortgage transaction. That 3.5% can be all gift. And they actually allow co-signers too, a non-occupying co-borrower. So if I only made $40,000 and my dad made $100, so I take all that $140 to help qualify to buy that house. And why would dad co-sign? Because he knows I'm probably doing a side
Yeah,
job,
once you run
cash
house,
under the
man.
table to pay the mortgage,
Yeah,
right?
once you run
A
house.
lot of cultures have cash under the table jobs, and they only report 40% of it maybe. Actually, I probably would think that most of the self-employed borrowers that I see, they're probably reporting only 50% of their real income, and they got more cash. And that kind of hurts them. When you want to buy a house, you got to show the real money. If you want, hey, I make $100,000 a year, Struff. I go, no, you don't. You a self-employed borrower. I have to take all his or her expenses, and now you only make 40.
And that happens too,
You know,
especially.
I mean, I do a lot. and I'm
Seasonal.
like, you know, I can't finance. I always tell people, if you want to buy a house, get yourself prepared. You got to give me a good tax return if you're self-employed. If you're W-2'd and you work for a hospital and you're making $75,000 a year as a nurse, that's great too. That'll get us into the home. And the husband's making $40,000 as a union worker or whatever the figures are. Okay, but the average home that I'm accustomed to seeing is about a $300,000 home. So you got to make close to $85,000 a year to pay that mortgage payment back. So that is husband and wife's income. To qualify.
And if you drive the cabs, don't, I just wanted,
Yeah, I mean, I got a cab driver, an Uber driver, he's showing $75,000 a year in income. Real income.
real income.
Real.
Because
You know,
Uber drivers makes money,
he makes money.
but some of them, I had a guy walk into my office making $70,000 gross, wants to buy a house, but when I look at his taxes, he only makes $7,000.
Yeah.
And he's like, no, I make $70,000. I said, no, right here in your taxes, you only make six. So he wrote off all that money. And he still wants to buy a house because his tax return says gross income, $70,000, right? So as people, you guys show real income, like at the bottom
Yeah,
of
for
the,
my
at the
program,
bottom,
for these programs.
for these programs.
FHA and IDA that are involved. IDA is the state, Illinois Housing Department Authority that grants money for down payments. So that's a nice benefit. It's a lot of different programs this morning we talked about. FHA, conventional, IDA, there's VA lending out there. There's also types of lending depending on the background of the borrower. I'm just sharing with you guys this morning that I like FHA because of the liberal underwriting guidelines. They're more flexible. So when I take a loan app, I run it, I take all that information, it's all in my laptop, and I run it, I pay for this proprietary software from the U.S. Department of Housing, HUD, and FHA. I literally hit a button, and it does all this thinking, and all of a sudden it comes back, and it'll say either approved or not approved. And then when I see a not approved, I'm like, okay, we got to figure out why it's not approved. I print out the information, and it'll tell me shortness of credit, length of job time frame, all of these things, and I'm like, okay, let's try to figure a way around this. And that's why people get pre-qualified.
I have a question
So-
for you, sir.
I like questions.
As a lender, will you advise me to stick to you alone, or should I have other lenders while shopping for my first house?
Well, a lot of people do shop around.
No, I mean you.
But for
What's your
me-
advice to me?
I think I pride myself on my business being in it for 30 years or better. Plus, I meet probably 50% of my clients, so I have a face-to-face relationship with them. And that's that comfort zone that you might have with your banker. And this phone rings a lot. I'm probably the only loan originator in the industry that answers the goddamn phone on a Sunday night at 10 o'clock at night.
That's a true thing.
Streff, I'm freaking out. We're going to close tomorrow. What do you think? And I'm like, just buy it. Because in 2 years, you're going to be so happy that you bought that house because it's going to be worth, on a bad day, 10% more than what you paid for it. And you're going to build up equity. And if you're married and you got kids and the kids are in the yard and you're barbecuing, you're going to say, this is why I worked my ass off. To get my house, or my kids, I got the schools. I mean, those are the things that home ownership gives you. Home ownership also gives you the pride of going to work and kicking ass so you can pay the bank back, right? But people use me because I'm a hands-on loaner.
It's just hands-on. And let me tell you, I had to deal with Peter one Saturday night. We were picking up that 500.
Am I correct?
Right? That property.
You know where to find me. I mean,
Yeah.
that's important.
He answered the phone.
That's
That's
As a lender, what is the red flag that one can see when working with a lender? Maybe one or two couple of red flags. What do you think?
Well, I don't know what other people do.
No, I mean from
You
the
know.
experience of 30 years now. So what do you think can be a red flag if someone is working with a lender?
Well, for me, when I'm, you know, I do a lot
Not
of.
you, I
outside
mean,
of-
experience.
A different lender.
I think he's
A
saying like
different lender.
if he's gonna work for a different
all right, I'm
lender-
not gonna be a bad egg person here, but Bank of America will promise you the world and not deliver it, okay? That's one bank. I worked for Wells Fargo Bank for 4 years. They were very aggressive with underwriting. Then one year they came up and said, hey, Streff, we don't want investment loans anymore. Investment loans is you wanna buy a 2-flat as an investment, and that was 90% of my business that year. And I'm like, I gotta quit, go to another bank. Because all I do was investment loans that particular year.
What I see, most
So-
lenders, they don't wanna work with difficult people. They don't want to work with people that need a lot of work, that, you know, to, like he
Massage, I
said.
wanna call it
Massage,
massage of the
They,
lawn.
like he says, if it
Because
comes
of it.
back,
Yeah, but-
negative, he will tell you, well, we can go around this where that, Chase Bank and a lot of these banks, they want easy clients. They just wanna
Easy
make the
clients,
money.
yeah,
They
yeah,
want
yeah,
to
yeah,
have
it's
They
a
everything.
don't
great
want
point.
Yeah.
anything bothering them, they just
They,
want easy
they
money.
want easy clients. My first house that I bought 23 years ago, I bought it from Leroy. And I will tell you that Leroy will work with you. You know, a lot of
Yeah,
these
together we
investors-
work to get there. You know, hey, we had a perfect example last year with that guy
Yeah.
that wanted to buy the condo.
No, I
And he got, and I
know.
told him to go to Wintrust.
So-
I came here
He went to
because of
Wintrust.
so-
Because
I'm
a
just
lot-
asking my question.
no, but a lot of these lenders,
Remember?
Mark, yeah.
they want easy. They want
He went
easy
for
money.
rent or something.
They-
I don't remember.
If
Like
you're-
Chase, he wants easy money. They don't
Yeah,
want-
if they're stuck with you,
They want
they'll
to like,
just ignore you.
nurse and doctor, that's the easy way.
Yeah,
You
yeah.
know how much you're already making fast in the
Yeah.
nickel of eye, they're gonna give you everything you want. Because
So,
you're gonna get
let
money
me ask you,
from
if I wanna buy a house and we are about closing and we call him and he's not able to
I'm at the
pay-
closing.
Huh?
I go to my closing.
I know, I'm just giving an example.
Okay, go on.
Now, the funds are no more available.
The funds are no more
But
available.
in that kind of
Closing.
I mean,
situation,
with fund, your funds, the bank fund, the bank will have its money
from the
there.
bank, it's no more available.
The
So,
bank will have its
no, I
money there.
mean, for example, I had a case that someone is about to close a house, but they didn't come up with the money any longer. They start giving stories.
Okay, so that,
So I didn't know whether it's from the bank or from the lender, but all I know is that the money for the funding.
was that in 2008?
I don't know. But I
Okay, so the reason why I asked that because we were doing a lot of loans in 2008. And we went to close and there was no money. That's when the collapse happened in 2008. And I had a couple closings going and I'm like, where's the money? The bank closed down,
I remember that.
right? So that happened.
Yeah, I work
in
for
these
Guaranteed
days-
Rate Mortgage. We're the 6th largest mortgage banking firm in the United States of America. So I hope to God, I mean, we're continually growing. I would hope that our
The bank is
funds
all, the money's
are
gonna
going to
be
be
there.
there. I've been here with this bank company for 11 years and the money's always been.
Money's always there.
All right.
No,
I mean,
unless-
something can happen if the
Something-
money,
yeah.
they wired it
What's
to the
that- what's that
wrong
gonna happen?
title company that.
You can have a dry closing. Maybe that's what you're talking
explain
about.
that closing for me, please.
Dry closing is when we all go to closing, there's no money. But the money comes in, maybe we're there at 10 o'clock. And the money comes in 4 o'clock, or the money comes in tomorrow, or something happens and the money got late. But you still close, you sign all your documents, but you dry close. You don't get your keys as the buyer yet, right? But you did all your signature and you said, okay, yeah, the money came in 5 o'clock this evening, but we already closed at 10 o'clock this morning. So you dry close, right? But you still close, it's just that some banks, and I've been with some banks who, they want to be able to do all your documents, then send the money. And when they get a copy of your documents, they look at it, it's all good, then the wire comes. And then you sit around and you wait and you have coffee and you wait till the money gets there.
I have a question. Is there anywhere somebody can get a loan or buy a house without involving the bank? Is there?
Cash.
Cash.
Or
Or what?
seller financing,
Seller
but if the seller, let's say an older gentleman wants to move to Florida for the conversation, but he wants a revenue stream, sells you his house for 300 grand, and I'll give it, I want 6% interest rate, and you give me $2,000 a month for the next 10 years. But that's very rare in today's market
today's
because
market, yeah.
money's out there. There's, like I said, for every house, there's probably 10 buyers for it today, right now. You know, so when I see a listing in Niles, Skokie, which are a lot of areas that I do a lot of loans, I've seen lines out the door for people that want to buy that house. It's a very competitive time. And that's why I go back to getting pre-qualified, and some people call it pre-approved. It's like getting the blender, the tax returns, the W-2s, all the information, getting it all out of the way, seeing how the credit is, make sure the credit, if there is a derogatory, we answer it, we address it, we clean it up. You know, so.
And then it's like when you go to buy, you go buy with cash. Till you have your approval. You have your letter. You can say, hey man, send the offer. Right? Because you have the letter in your hand. It's like, but if you go look at a house without a letter from Peter, it's like, why are we looking? Because if you like the house, you can't make an offer anyway. You got to go through the process, right? Through the entire process to get the loan. And by the time the house already
Who
sold,
makes the offer, me or you?
I will.
I need to
You need to
release
discuss
it.
it with me, right?
Correct.
Before you can, okay.
Oh yeah, we'll have that
Okay.
discussion and.
And he'll make a decision based upon recent sales in the
sales.
neighborhood. So if everything's selling for $325, you're not getting it for $250
250, yeah. This
Okay.
is wasting both of our times. So
today, right
Today.
now, in this market.
So as you are representing me, what am I gonna pay you? Or what are you?
you don't pay me.
No, what are you getting from me? Nothing.
When you say when you get it from me, what do you mean?
I mean, from beginning to the end,
You get my services for free.
for free.
You get my services.
That means the seller is gonna.
Seller
Gonna
pays
pay
me,
you.
yeah.
I said it before.
So,
So what happens in a situation I had that sometimes the seller do pay the closing costs? What comes up that makes him or the seller to pay the closing costs?
it's not, when I
Because
look at it,
he said that if she asked a question that if I have my down payment, he now said that you can still get a forgivable loan to close. But what happens that makes a seller pay the closing costs?
so there's,
Oh, the seller pays the closing costs, everything's negotiated.
everything
With the
negotiated.
realtor.
With me.
On a certain down payment,
Yeah.
FHA loan, the seller can pay up to 6% of the buyer's allowable closing costs. So in
But I
Chicago,
asked for that for you.
closing costs are
Okay.
probably 3%.
Yeah, they're not just paying it.
4%.
Yeah, I asked for
So
it.
we make adjustments to the contract and to what the seller can provide as a closing cost credit. And that's why I say every deal is different.
And it's not a must.
No, it's not a must. I had sellers who do not want to pay closing costs. They said, no,
Oh, yeah,
we ain't
yeah.
doing it. And we're like raising the price, like, yo, if you raise the price, I'm gonna take that money, but they do not want to be involved in that. I had a seller last year who said, no, I ain't paying no closing costs. I'm like, we're gonna raise the price. Nope, don't want to do that. I could do it. I told her I can't get it done. But that's negotiated between the realtor and the other realtor, with the seller, with the buyer and seller. And that's something that we talk about. We said we're gonna try to get it. Once we get it, it goes in a contract. That's additional funds that you have in order to continue with your deal. Well, then, so you can get 5%, then you get the IDA, then you get, see, there's more money coming into the deal. Sometimes it costs you more because some seller says, I want $250, and if you can qualify for more, you may add $10,000. That's really your money you're adding to give back to you. Right? But you gotta pay
I don't
back.
understand that one. Explain the.
Sometimes the seller wants X amount of dollars. They want $100,000. You said, no, I'm gonna give you 90. It says, no. If you want closing costs, you may have to add $105,000. Right? And then the seller gives you back the $5,000. But there's no seller. The seller doesn't have to give it back. Have it give it to you. It's all negotiated. Right?
He's 101.
I tell you, he's a 101.
We got a diploma or something to give this guy? Were you like that in school? Hey, teacher, what's up?
I like to know what I'm doing.
No,
And that's great.
messing
That's
with you.
great.
Don't
That's-
worry, I'm
that's-
all good.
That's good.
It's good to ask questions. It's always good.
I mean, I want you guys to ask as many questions because then at least now you know you're comfortable. You think you got it. Instead of just me or Fred.
The making the move is the big thing.
Making-
and it's
yeah.
scary. But
It is
you
scary.
gotta- You know, if you're paying $2,000 a month in rent,
Yeah, you need
mortgage
to hurry
payment
up.
with all in could
Three
be $2,000.
bedroom, and it's not
It's just
even
gonna be
enough.
hard to find something.
Are you working Lake Forest?
Yeah.
you can go further north
Yeah, you can go up further north and get a
and
home.
get a home.
It's, I don't know about my kids, that's, they like good in this area.
No.
Uh,
I'm gonna give you a good
Skokie,
I'm gonna give you a good example.
I don't know.
I spoke, some of us got, not at the, girl from my office,
So
Anyway.
what part of North are you?
let me give you an example.
I mean, where would she buy a house for, like, say,
Yeah.
290,000, 300 grand? Up that way would be
Grove,
probably Lake. Did you buy something up there or no? Lake Bluff?
No, not even Lake Bluff, she'd have to go to, for 290, something decent. Cause you're in Lake Forest, Highland Park,
Highland Park.
no, not Highland Park, but I'm just saying, if you go further north, you have to be maybe around Lake, for 290, 300. Cause I'm looking right now in Gurnee for some
Antioch?
certain thing, that's too far from
That's
Lake Forest.
too far.
Maybe around Lake, maybe your best bet,
What about
or
Cape-
North Waukegan, or north side of Waukegan.
That's too far.
Well, you're 20 minutes away.
It's not just about me, it's about my kids.
It's all about you.
It's all about you. They ain't paying no rent. They paying rent?
Huh?
They paying rent?
They
The kids.
don't pay rent, but my husband working downtown.
Oh,
So you see, if
Oh,
I
he
go
works
down
Wow, you're
there,
far away
I'm
downtown.
okay with my, I'm fine, you know.
Oh, he works downtown.
Yeah.
Okay.
Well, then you just,
Maybe.
yeah, I don't know.
That means you have to go out west.
Where,
Maybe Elmhurst. I mean, so you guys have a connection like this. You know, you work this way, he works
You
this
could
way.
buy a home in Elmhurst.
Yeah, go down.
I'm house, yeah.
Elmhurst is what, up at 290 and 294, Lake Street is
So you may have to go
294.
west.
And that's about three, I've seen some houses, ranches out there.
What of this plan, Valentine?
Des Plaines is expensive.
It's a little
too.
far for you.
It's hard to
Look at
find stuff in
Valentine.
Des Plaines now.
Maybe Elmhurst, maybe. I'm
But
gonna
Des
say-
Plaines is a possibility.
Not Parkridge.
Package is not good.
Expensive.
It's very expensive. You get a garage for that money.
Get an out, you get a freaking outhouse,
You get an
bro.
outhouse for that money. But yeah, I mean, we
What about
can figure it
Wooddale?
out.
Wooddale area. Wooddale, I don't know.
Wooddale, that's, I was talking to her regarding where her husband works, I mean, the way you work.
No, I'm talking mine now. I'm thinking of moving towards
To Wooddale?
Itasca.
Oh, yeah, could be a task.
Yeah, I'm thinking about the, what
Because
is
it
what is
has
this
like a
community
new
close to
hospital.
the airport? There's another.
Franklin
I just
Park.
closed on a house on the Grange Park.
There's another Schiller
Oh,
Park.
there's Franklin Park, Schiller Park, there's Stone Park, there's
Schiller
Elk
Park,
Grove.
Schiller Park is
Elk
nice.
Grove.
Elk Grove, oh, yeah, all in there.
That's off of,
You would be
There's
better
a part of
west.
Chicago too.
Yeah, you'd be better west
I
because of your husband.
want some part of Chicago close to the airport too. That's what I'm looking for. Not in this area, but, you know.
Belmont and Cumberland, what do they call that neighborhood? That's
Belmont
affordable.
Cragen.
That's a pretty
That's-
affordable neighborhood.
Belmont Cragen.
River Grove,
Yeah, River Grove,
that's affordable.
yeah.
So like I say, it's
I
location
mean,
where
it's a
you
starter house, you guys gotta remember, this could be just a starter beginner house, you wanna
Yes.
get your feet wet, get into a house, fix it up,
And
make it
then-
worth more money,
Mhm.
and then the next house,
Yeah, that's what I'm
you
trying
know,
to do.
3 to 5 years.
Usually their first home is not your home.
You know, I mean,
That's the
most
norm.
people today will stay in a house for 3 to 5, top 7
7 years. And then they sell it,
And
they
then
move
they're
into
gonna sell and move into
a
a
home they
different-
really want. But you gotta start somewhere.
Right, and that's the thing, getting in.
That's the thing, get it in.
Anyhow, thanks for all your questions.
Yeah.
Thank you for all your questions. Kept it active.
Any questions from you? I mean,
Yeah.
you're just listening?
Yeah.
Okay. All right, you know, because I want to be sure to kind of get you all guys in so that we can start the process.
Last question. What was that? So what's that preferred debt to income ratio, Peter? What's your preferred debt to income ratio?
Well, 33% of the household income, and then 43 when you add up all the car loans and student loans.
Okay.
Okay.
Okay, is it true that normally when you're looking to buy a house as a first-time home buyer, your broker will tell you, hey, get rid of your car loan, because this doesn't make sense, you're trying to buy a house, is that okay for them to tell you that?
Yeah.
How do you go about handling that? Should you actually get rid of it?
I wouldn't know until I see the whole
You
credit
have to see the whole
profile.
credit, yeah, and
Okay.
your income.
No.
Okay, you
It's all
don't have to give me
determined
your
on
car
income.
if your ratios are good.
Okay.
Sometimes,
I wouldn't know.
you can move your car to her.
Okay,
After
well,
buying your house, you move it back to yourself.
Yeah, they were
No, I was gonna say you sell it to your sister.
Yeah, that's
Yeah.
true.
We'll find a way. You just gotta be willing to dip in the water. Everything's all
Yeah, don't go there. Do something that's not
This guy
right.
knows all my tricks. Talked to him last night.
I think he's gonna
okay,
go.
I
in the real
have
estate.
one question. Like, let's say I'm using, my husband is the one that wants to buy the home on his name.
Yep.
Maybe you need my pay stub, or maybe, let's say, I know he make like over 60-something thousand a year, but maybe the income, maybe let's say it's low, then I have to get my pay. It's like, I don't know how this works, because I've been hearing a lot of stuff, but I don't know if it's true. How the.
Well, again, I would sit down with you and your husband. We could meet and have coffee
Okay,
and
so
do
what if-
everything.
What if he's
And
buying the home?
I got your email
Okay.
here. I would email you what I
What if
need
he's
together.
buying the home on his name, but
Together, I might need your 30 and his 60, that's 90, and you have one car loan, that's not gonna kick my butt. I don't know. If you have 3 car loans, one for your husband and one for you and one for your son, that possibly could knock us out of the box, and I might take you off the loan. I don't know.
And he can buy the home by himself.
yeah, that's what I'm trying to say.
Yeah, he can do that. And people do that because they said they want to be able to, if something happens,
Mhm.
that one person can pay the mortgage.
Yeah,
So people do that, husband and wife.
okay.
Right, so-
That's why I say it's
So-
getting pre-qualified. It's just so we get all the bugs out.
Yeah,
I wanna know what we're up against, how we're gonna
I know two people-
strategize the deal.
no two people are the same. I mean, so, once you get all that stuff together, then you can say, okay, yeah, I can afford this. Okay, you could be making the same money as Jane, but you guys have different debt. So Jane could say, I may not qualify where you can.
Yeah, like, let me, like, on my own side, I'm the one, have Carlo, but for him, he doesn't have anything.
Good.
His
So he
credit good, everything is good, so we just wanna share it, like.
So he's buying a house.
Yeah.
Alright, so he's buying the house. She's not buying the house.
Listen, I know within 5 minutes what I'm doing on every deal. If I see the credit and I see the returns, I know how I'm gonna do the deal, period.
But the problem there now.
Become a habit
We
for me.
filed together anyway, we
So
filed.
It's okay, I
Okay.
take you off the
Okay.
deal, it doesn't matter. There's no requirement
Oh,
to just do it under, we can do it under his name. If he qualifies, it's fine.
okay. I'm just asking because,
But I think for you, for the rent you're paying,
yeah,
You
it's
gotta
it's
jump.
really
Maybe you
crazy,
gotta
and
buy
I have
something.
I'm trying to, even at I live in 3-bedroom here, but I have a storage down pays $240.
oh my
I'm
gosh.
trying to move it now before the 19th of this month. This kind of crazy for me. I'm telling you, like, if I put those money in my home, I will be fine.
Absolutely.
You know,
So you're
paying
paying 2,000 plus, so you're paying 2240.
Can you give away?
2240.
You got a pickup truck, give him $240 a month, he'll just drive around with your stuff.
They can do the giveaway. I have important things there.
So I think it'd be, you probably wouldn't want to go onto the western suburb, because your husband works downtown.
Yeah, I'm
They said-
planning like from now to 4 months or 5 months. That's what I'm planning to get a
Well,
home.
you're up in Gurney, how much is stuff up there?
A decent home? 450.
Okay. And we can't go there. And I'm just using 300 grand as a number, you know, so.
Or, I mean, it all depends on what size home you're looking for. I say 450 because I'm thinking sort of the house.
Probably like how many bedroom?
4-bedroom, 2.5
I'm
bath. How
looking
many
for
kids you got?
4-bedroom. I have 5 kids, but
So
very
you-
soon 3 is in the college.
Oh, 3's in college.
Yeah, so probably maybe when they're done, they may move to Atlanta.
They can move anywhere, yeah.
Anywhere they want.
Make sure they move. They might.
You make sure. So, but I have my other 2 kids, my mom, my husband, then I, so,
Right? So you need a decent sized home.
yeah, very decent.
So you can, I mean, it depends if you qualify, yeah, I mean, you can get, I know it's a little hard, I mean, he can take the 90 straight home, but if you go to Gurney and get a $450,000 home, if both you guys work together, you can qualify. You can get a 4-bedroom, 2.5 bath, garage, backyard, and
Swimming pool.
not a swimming pool, but you
And a
can
jacuzzi.
you can get that, a decent yard space.
What about Mundelein?
Mundelein, Palatine, you can get a decent home. And then a sort of a newer home, 35, 40 years old, because, yeah, I just go back to, what you're paying is just,
Now, I have a question. Now you mentioned new home. Someone told me that new homes are cheaper to buy than old homes. Can you explain something like that? I know you know what I'm talking about.
depends on where you're at. Now, the new homes, you get a new home for, well, I don't want to say that, because that's not true. Because you can get a new home, I was getting a new home, they're like $550,000, $600,000 for new homes. But the new homes around here, and there's not much anything. But if you buy from a developer, okay, if you buy from a developer subdivision, and they say these homes are $380,000, $390,000, the basic, a lot of times those homes get to $450,000 because of the upgrades.
Yeah.
Right? Because the upgrades are not, they cost money. And they will give you what the basic is. Of course, you're buying off of paper. Some people don't like to buy from paper. Sometimes they have a model, sometimes. But if they don't have a model, then you buy it from paper. But there's an upgrades that comes with that home. And by the time you're done with it, it's $450,000. And it's easier as a first-time buyer to have that home right there. That's the home, you like it, you buy it. It makes more sense that way. Okay? And keeping newer homes is based on what you pay for it are the taxes. So is it 1.5 taxes because it's going to be 0 for your taxes. And so you got to realize, when I say 0, when you buy a new home, you don't have a tax rate as yet because it has not been assessed. But it's going to be assessed based on the sale of the home. So I think it's 1.25 or 2%.
2%.
It may be going up.
Lake
but
County, Cook County
Cook County,
taxes are
1.5 or
2%.
2%.
Not gonna sugarcoat that. That guy Kagi went crazy, raising
Right.
taxes on a lot of properties.
So it's 2% now. I think the last time I said was 1.5, 1.25, 1.5. So if it's 400,000, taxes are $6,000. But now it went up to 2%, it's 8,000.
Oh, yeah. In fact, look at Skokie. The tax bills went from like $6,000 to like 10. It's expensive in Skokie now. More
I
to
know,
grow.
that's why I didn't take, when I was looking, that's why I dropped apartments there.
Yeah.
Yeah.
So, it's
Des Plaines is affordable, but it's, there's 10 people looking at Des Plaines too. Where?
Mount Prospect, not bad. That's a little bit expensive too. It's not too, but you can, hey, you're in the northwest suburb, what can I say?
Yeah, you got, when you go to the burbs, you got also the decent schools too.
Yeah, you got
a little bit
Yeah,
less.
because my daughter is gonna be going to,
You know.
yeah, I need a decent school for her. She's a lot baby.
I went to Naperville and sold this one lady. But
And Naperville is too far. I know all these areas.
and she went for the schools. She's a nurse downtown Chicago, she went to Naperville. And she says she has 2 daughters and she wants them in good school district. So, whatever that district is.
never sees me, sees me.